Find out what was moving all those stocks. Julia Lee joins us now from Bell Direct. Julia, a good day for the Aussie share market.
Friday, surprisingly, it was a good day for the Australian share market coming into our market today, and the leads were a little bit mixed. We did see the US market down overnight, with the Dow down by 0.4%, and the SPY futures really not pointing to much direction on our market at all. By the end, the market was up by 1.5%. Those strong jobs numbers certainly helping our market gain some momentum and some ground. We did see the banking sector doing well, and that's after US financials gained overnight. Westpac was up by almost 4%. That Macquarie upgrading Westpac to outperform certainly helped the stock. In the financial sector, Suncorp Medway also doing well, up by 4.7%. There's been increasing speculation about its banking assets and a possible takeover of those banking assets. And GPT Group doing well after its update, up by almost 7%. The material sector also did well. We saw base metals increasing overnight in London. In fact, base metals jumping by 3.4%. That was good news for BHP Billiton and Rio Tinto, which gained around about 1.7%. Alumina in that sector also having a good day after its first half results. First half loss beat expectations. That stock was up by almost 10% by the end of the day. And of course, earnings were very much in focus. We saw News Corp coming out with its fourth quarter earnings result, and that was also better than expected. So that stock up by 3.1%. Tabcorp, though, falling by 4.7%. Its outlook a little bit clouded by what's going to happen in terms of Victoria and the gaming licenses there. But altogether, a pretty good day for the Australian share market. All sectors gaining except for one, and that was the consumer staples area. If we have a look at the 52-week chart and where the Australian share market is, this is the S&P ASX 200. You can see once again we're looking to test that 4,350 point mark, which seems to be a bit of a barrier for the market, but is going to be an important mark in the next couple of sessions. So hopefully the market's going to be able to close above that point quite strongly.
Now, Goodman Group, what have you made about that announcement of a capital raising today?
I mean, that Goodman Group announcement was leaked by the media in the last couple of days, so no real surprises there, but Goodman Group has come out with its result. It does look like in the last financial year they've had revaluations downwards of about 1.2 billion. They've also had to cancel some of their projects, and that's led to them not actually being able to meet their previous guidance. So operating profit has come in at $408 million. Now, their forecast for the current financial year is for $310 million. Net tangible assets came in at 85 cents at the moment, and their gearing level at the moment is about 48%. Now, they're planning to reduce their debt and get that gearing level to under 30%, and of course, it's going to be through a capital raising. They're planning to raise $1.3 billion through shareholders at the discounted price of 40 cents. Now, if I bring up Goodman Group's share price, this is since 2009, that 40-cent level is about an 18% discount to the last traded price of 49 cents. They'll also be raising $500 million through a preference share issue to China Investment Corporation. And if you remember, about a month back, China Investment Corporation entered into provide a facility together with Macquarie to Goodman Group. So they'll be deepening that relationship there. Now, Goodman Group shares are in a trading halt while they do part of that capital raising, but the debt cloud has been over Goodman Group for a while now, so they've also renegotiated some of their debt with their lenders. So now their first debt, about $4 billion worth of debt, isn't due up for maturity until beyond 2012. So hopefully it will be better days for the group ahead. It has been under this debt cloud, and that capital raising, $1.3 billion, which is basically how much the market capitalization of Goodman Group is at the moment, will hopefully help it into a new era in terms of its share price.
Talking about better days, well, Bradken shares doing well after its full year results.
I guess mining services companies have been under a bit of a cloud because of all the turbulent conditions in the last half of the year. But Bradken has come out with a pretty good result. Its full year operating profit up by about 11%. So it came in at $64.3 million. And if you divide it up into the different divisions, we actually saw mining sales revenue up by about 14%. We saw the rail division doing well with its sales revenue up by 19%. It's the industrial industrial division, the industrial area, which really underperformed though, and that's because of a lack of demand in that area. And one thing we saw by Bradcom was that the first half of the year was quite strong, but the second half was quite challenging because we saw a lot of mining companies cancelling projects and putting off capacity. But its margins held up well. I guess Bradcom has been focusing on cost cutting, and that's been part of what helped their margins hold up well. Their dividend has been cut though from 22 cents down to 13 cents, but that was ahead of what the market was expecting. The market was only expecting a dividend of 10 or 11 cents. So its share is the best performing large cap on the market today. If I bring up an intraday chart of Bradcom shares, their announcement came out at about 12:30, and you can see after 12:30 their shares absolutely jumped, and by the end of the day finishing up just under 15%.
Yeah, very good rise there. Julia, thank you so much for your analysis.
Thanks, Bridie.